Just a moment, everyone. Just waiting for everyone to join.
Forex Lens gives you the edge. Forex Lens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. Forex Lens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with Forex Lens. Check out our performance at forexlens.com. Get the edge on trades. Your eye into the markets. forexlens.com.
Good morning, everybody. It is Thursday, December the 5th. RP is on vacation. This is George FX, GFX, coming at you live from Toronto. I apologize for the quality of the sessions in the past 3 days. I'm pretty new to this, so there's a lot of ums going on after reviewing. I'm very cognizant of that. I'll try my best to keep it a bit more broadcast quality for you. So the other day, we went over our time frames. We did year over year, quarter over quarter, month over month. We plotted our tides. We plotted our waves and our ripples. That's some Dow theory for you. You could see that we have our main trend is going down. Our secondary trend is wobbling. Oh, our secondary trend is actually, see, I'm starting to get confused myself, and that's because I should probably walk you through. Yeah, let me do this here. Remove all the pivot points. That's why it's nice to have this object tree. You can just take things off. So critical. It's actually they've always had the object tree, but they've just made it so much cleaner and better where you can group things. So you could see how I group my tides. It's just two lines here inside this folder. I called it tides, right? So I can disable it, enable it. So let me make this a bit more clear. So our year, 2019, started it right there. We plotted our highest highs and lowest highs, lowest lows, or highest lows, lowest lows, and that created our primary trend. Just a bit of an overview, right? Then what we did was we plotted our waves, and that's what's inside this trend here based on the quarters. So that would be the next thing that we did was the ripples, which is inside there, plotted on the months, and I'll zoom that in a little bit. So we've got something that looks like that, right? After that, we also looked at the 200-day moving average, which coincidentally is our resistance zone at the top here. And then we looked at pivot points, and pivot points are essential, especially for day trading. I've set up a chart here with four charts, one for 15-minute, one for 1 hour, one for 4 hours, and one on the daily. And this way you can have a quick overview when you're doing your day trading. You can see what your pivot points are on different time frames, which does help quite a bit when you're making some judgment calls. The next thing I wanted to do with you guys was to decide help you decide on which indicators to use depending on what frame you are and if things are trending or not. So you have your trends, but then you also want to find out if your pair is trending or non-trending, and that's going to give you the indication on which indicators to use on those time frames. So a quick, easy way to figure out if something is trending or non-trending is to use the ADX indicator. You can find that here under indicators, ADX. And I use the multi-time frame one here. You can also write your own. There's several scripts you can either pull off a Google search or you can just write it yourself if you want to do the math. So yeah, so when something is in the above the 20, then we want to use the MACD indicator. If something's below the 20, we want to use the stochastic indicator. And you also want to make sure that you smooth them out a little bit more than they are from the standard. And I'll show you how to do that. Um, Another thing to keep in mind is you want to keep your sessions on. So like the London session, there's an indicator for that. You will have to zoom into a smaller time frame in order to see those, but at least we can see in the London session, that's where we're going to get the most of our volume, especially towards the end, as we have that overlap with the New York session. So we created a new Ripple starting from December 1st, right? Because it is the last month in the last quarter of the year, and the economic calendars will line up with that. You'll see some patterns emerge. If I look on the daily chart here, you'll notice that we have uh, our newer trends really do start at the beginning of each month, and also they do line up with the beginning of each year as well. So if we go back in time to see some of the previous years where the year ends and starts, we usually have some sort of an indicator on how the trend is changing, and on the business cycle level, it is psychological as well, but also has to do with those monthly, quarterly, and annual reports that come out from the different indexes, like manufacturing, PMI, for example, or the NFP. And you'll notice some turns in trends or continuation in trends if you analyze it this way, right? I'm going to zoom back in here and let's go back to the 1 hour. So let's uh, let's see what indicator is going to line up for us here on the 1 hour chart. Actually, I'm going to go back to the 1 day chart only because it's a little easier to see. Let's remove all these things. And the pivot points, let's get rid of that. Okay, so we could see here that we were trending at this point. So that gives us the indication that we should be using a MACD. Here we're not trending, so that's more of a stochastic feeling. You can combine the two if you wanted to, just for confirmations, it's fine, especially for currency pairs. Uh, but it's something that you should keep an eye on. I'm going to load up a basic built-in stochastic indicator here, and let's take a look at this. If you go to the settings, it's set to 14, 3, and 3. I'm going to set it to 14, 5, and 5. And what that does is it smoothens out the curves. If I let me make this nice and big, you'll notice that you can see the crossovers a little bit clearer. For example, this is a crossover. You have your K line, right, which is in the blue, and you have your D line, which is in the orange. and we're looking for a clean crossover. If we set this to 14, 3, and 3, you're going to have more jagged edges, and you can't really see how clean that crossover is, right? So the primary indication for turning points are signaled a lot better when your curve is smoother. And you want to look at nice, smooth crossovers, just like here. See if I can zoom that in a little bit more. You can see how that curve is way smoother. You can see that this is a clear indicator for price to be overbought, right? And this is a clear indicator for price to be a little bit more oversold. Now, these levels here, 20 and 80, usually I keep those pretty static. However, in some pairs, you'll notice you might want to bring it down to 70 and 30. And it really does depend on the pair and the time frame as well, where basically you want to kind of go back in time a little bit and you could start to see some of the patterns here. So let's draw a couple of lines, vertical lines to line up with anything that's over 80 or anything that's under 20, and see how those line up for indications on whether you you want to buy or sell, or it's a confirmation for your analysis if you're going to be buying or selling. So if we start all the way back with the tide, right? We know that if anything reaches the top of the resistance of our tide, we have a nice sell indicator. That's the first sell point. That's the first thing I'm going to say, okay, well, we have a sell here, but I need some sort of a confirmation. So then I'll look down here and I'll say, oh, wow, okay, we're in overbought territory. There's a clean crossover with the K over the D, right? It's very clean. The slope of the curves, and the slope is the angle. So when you have a nice clear slope, um, if we were to zoom in on this completely, and we're looking at how these angles are lining up, and if we have a nice clear divergence, a nice clear slope going out, we know that this is a good signal for, or an extra signal to let you know that this would be a fine sell, right? So if I just kind of go back in time with a vertical line, and let me just line these up for you. So this will be one of them. I'll draw a vertical line here, and let's replicate that vertical line on the chart as well. So this is pretty much where our indication came from, the stochastics indicator. This is another indicator we had that we just bounced off the 200 MA resistance, plus we also bounced off our primary trend resistance, right? The tide here. So that's 1, 2, and 3 confirmations for a nice sell, which you would hold until you can use the pivot points to help you plot your take profit. Or what you could do is you can wait until the uh, the K and D come down. You can say, I wouldn't even go with halfway. You kind of have to look at the curves and see if there's clean slopes, if there's clean crossovers. If you have a perfect example of a nice one is here, where it where you're not getting this tangle, you're just getting a nice clear slope going down, right? Um, let me step back a little bit here and try and find a couple more examples for you. So we'll find ones going because it's trending down. It's a lot easier to pick out your confirmations from stochastics on downtrends than it'll be on uptrends. Uptrends are can fool you a little bit, especially we want to ride the wave, we want to ride the tide, right? If you're especially if you're doing any kind of swing trading, this is a good way to find out your nice entry and ride that wave down, right? Which you can do. You can set your take profits. You can set your take profits on the pivot points on a smaller time frames if you wanted to, and find other entries as you go in if you want it to be nice and safe. Or you can be a little bit more risky and kind of ride it down um, until it touches your support or other support areas that you identify through other technical analysis. So I'm going to find a couple more examples where things are overbought. I guess this one is a good one here. This one is right at the cusp, still qualifies. This one's at the cusp too, so you could have taken that entry as well, uh, depending on your stop loss, of course. If you place your stop loss outside of this zone, you're probably going to get stopped out. So this one's a little bit too close, but you could see that we didn't have as clean of a curve here as we do here, right? Just like over here, you want to see it coming out and crossing down, right? If you see it coming out and crossing down, that's a good signal for you. But if you see anything jagged like this, it's gonna have it's uncertain, right? You have a little bit less certainty. But the reason why these ones are clean um, is mostly to do with the overbought levels. If it, especially like here, this went outside our 200 MA. It's a very clear cut signal that we have some momentum going the other way, right? So let's plot that right at that line here, and we'll plot this at this line here. Um, what else can we do here? We'll look at the MACD in a second too, because this will kind of line up here where it's not where it's trending. Let's go into a little bit of a tighter time frame. So over here, we're not getting these ones here. You see how they're flatlining here? So this is uncertainty, right? This is more you're not getting a clean crossover, so you should basically ignore that. Plus, we're looking at something that's trending. So stochastics is failing as a signal on the smaller time frame here, right? It's more of a not following along with those rules. So if you see something that's not clean like this, ignore it. You don't want to take any risks with that. However, here at this bottom portion, it's a little bit more cleaner. You're getting that slope, you're getting that curve that you want. It's a lot cleaner. So that looks like it's working as an entry. And mainly you just want to look at the curves. This one here is a fake out as well. You'll notice that uh, it's clean, but we're in the trending territory here, so it's faking us out. You have to be very cognizant that if you're going to be looking at taking a signal from a stochastic indicator and you're in the trending territory, it's going to work against you most of the time. So be really cognizant of what you're using, when you're using it, and on what time frame. Always double check to see if you're trending or non-trending. And then you can switch over to a different type of indicator like MACD. If you're in the trending territory, it's going to be a little bit cleaner. So we'll take a look at this here. And MACD comes with a histogram as well. Okay, so we're not getting anything that's clear here. I'm going to go back to the daily. These do work a lot better on daily time frames. You get a bit cleaner signals. So let's look at MACD as opposed to stochastics. We have a 0 point, and we're either above the zero or below the zero, and that's how this histogram works as well. If I notice that something is in the trending area, I'm more likely to get a good signal from MACD. I can still use stochastic for the confirmation, but we're looking also for a nice clean cross, right? That's your confirmation, is a clean cross. So here's a nice clean one right there, right? So, you see your candles are bouncing off the support for the tide. Then you notice that your MACD is crossing over because you're in the trending area. It's a clear indication for moves for the price to go up. And same over here, we're in the trending territory and we have our MACD signaling a crossover, and that's giving you a confirmation that the price is going to be going down, right? And of course, you would set your stop loss. You would set your stop losses outside or inside of your pivot points. So if we activate the pivot points, that'll give you some areas like above the R1, for example, if you're entering there. And of course, the take profit. Uh, Technically, you're supposed to set it to S1, but on the daily here, if we're getting this signal, I'm looking at only taking a few pips, right? You want to stay as conservative as possible too. Um, what else is there to go over with this? So check to see if you're trending or non-trending. Pick the indicator that's going to work with trends or not with trends. Use your pivot points. Confirm with everything else, right? So you want to use all your other tools that you have set up to confirm if this is a good entry or not. And that's pretty much it, right? I recommend doing some reading on the difference between oscillators or trending and non-trending indicators. You can do some trend following ones are like the moving averages, so your SMA, WMA, EMA, moving average envelopes, Bollinger Bands if you're into that, which does work pretty well. And then you have your momentum indicators, which are MACD, stochastics, RSI, rate of change, the ROC. And you just want to know MACD is a momentum indicator, but it is one that's used in trending times, right? So just keep that in mind. It's actually one of the only indicators out there, the popular ones that will do that. So be cognizant on your time frames as well. If I drop this onto the 15-minute, we're not going to have the same results. They do work a lot better when you're doing swing trades if you're looking at it from that perspective. But yeah, make sure to do give yourself a smoother curve for the stochastics. Like we're not really getting too much here, but you could see based on the slope, this slope is not as clean. But we do also want to follow the candlesticks and the story of the candlesticks before taking any kind of signals. You get those confirmations, right? So we have a very, very clear indicator on the MACD here. It's in trending territory, and then you see that giant wick here, which tells you that there's more room to move down. There's a lot of resistance here. Bears are coming in, right? So you don't want to just use any one of these. You want to use a combination of all of them, uh, as many as you can to give you that entry point, stop loss, or even just to read the price and understand the price action itself. It's going to give you more insight. And of course, don't forget that you can also hide a lot of this stuff if you're not using it. Place it in your object tree and take your time with it. Don't rush through it. If you're trading on a live account and you're just experimenting with any of these things or combinations, don't trade on the live account. Make a separate account, make a demo, and do it. Practice there. Don't risk your capital, right? and stay conservative. Stay conservative with all of your trades. Stay conservative with your stop losses and your take profits. And until you get a little bit of practice, don't move over to your live, and just stay aware of the slopes. The slopes are key. The crossovers, like this one. This one is a really nice crossover. This one is a really nice crossover here as well. It gave us a huge push up, and this one gave us a huge push down. And of course, those fall within those fall right within the 80x range for trending. You can probably find some other examples here. Let's bring that down. This is really overbought here. We're really trending. The signal came in a little bit late. It's right at this crossover. Once it starts to open up, that's when you know for sure that you have a nice clean entry. But the second it starts closing in, that's when you know that this is something that you should start thinking about exiting, right? So keep in mind, how open it is here, the slope, the crossover. You want a nice clean break, and then follow it a
Forex Lens gives you the edge. Forex Lens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. Forex Lens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with Forex Lens. Check out our performance at forexlens.com. Get the edge on trades. Your eye into the markets. forexlens.com.